Module Overview. Budgeting doesn't end with approval, it transitions into implementation, monitoring, and adaptive control. Module 5 introduces learners to post-approval budget lifecycle management. It explores techniques and frameworks for tracking budget execution, handling variances, adjusting financial plans to reflect evolving realities, and maintaining accountability throughout the fiscal period. This module ensures that you understand the importance of continuous oversight, the role of budget officers and department heads in ensuring compliance, and how to use real-time data and tools to analyze deviations and take corrective action. A well-presented budget loses relevance without strong post-approval discipline and responsive management practices. Hence, this module connects budget approval to operational results, helping organizations preserve financial health and strategic alignment. Transition from approval to implementation. Once a budget has been approved, it moves from the planning phase to active execution. This transition includes communication of budget decisions to departments or units, disbursement of funds per scheduled allocations, setup of internal controls and accountability systems, alignment of departmental operational plans with approved budget line items. Successful execution demands a coordinated effort across accounting, procurement, HR, and project management teams. Budget monitoring and tracking techniques. Effective monitoring means keeping track of budgeted versus actual performance throughout the year. Without it, overspending or underutilization may occur, causing financial mismanagement. Monitoring tools, budget versus actual, BVA. Reports compare projected amounts against real expenses, revenue. Variance analysis identify, explain, and interpret financial deviations. Cash flow monitoring ensure liquidity for approved programs. Quarterly, monthly reports maintain visibility over performance and forecast updates. ERP systems use SAP, QuickBooks, or Oracle for real-time tracking. Budget status classifications, approved and disbursed encumbered, committed but not yet spent, expended, already spent, remaining balance. Managing budget variances. A budget variance occurs when there is a difference between what was planned and what actually occurred. Common types of variances. Favorable variance. Actual cost is less than the budgeted cost. Unfavorable variance. Actual cost exceeds the budgeted amount. Revenue variance, differences in projected versus actual income. Volume. Variance, due to changes in scale or number of beneficiaries' projects. Steps in managing variances: identify the variance, investigate the cause, e.g., inflation, delays, inefficiency. Classify it: temporary, permanent, controllable, uncontrollable. Report findings to relevant stakeholders. Take corrective actions or revise the budget if necessary. Budget reforecasting and mid-year adjustments. Budgets are dynamic tools. As internal or external conditions change, adjustments or reforecasting may be required to realign financial operations with reality. Reasons for reforecasting: shifts in revenue inflows, grants, donations, government subventions, changes in cost structure, e.g., price increases, currency devaluation, policy or regulatory changes, strategic redirection or project delays, adjustment mechanisms, reallocating funds within departments, supplementary budgets, e.g., requesting additional funding, freezing or deferring non-essential spending, realigning KPIs and deliverables to match available funding. Reforecasting should follow governance protocols, ensuring that changes are documented, approved, and communicated. Accountability, reporting, and transparency post-approval. Post-approval implementation demands a culture of accountability. Stakeholders must know how money is spent, why deviations occurred, and what results are achieved. Key practices: budget accountability frameworks, clarify roles for tracking and approval, monthly budget review meetings, encourage dialogue between finance and operations teams, narrative budget reports, explain the story behind the numbers, open book policy for NGOs and public entities, public disclosure of spending reports, audit trails, ensure all changes are backed by documentation, digital tools and automation for monitoring. Modern organizations use software and dashboards for ongoing tracking and reporting. Tools: QuickBooks Online, budget tracking for SMEs, SAP or Oracle ERP, full-scale enterprise financial control, Microsoft Excel, customizable BVA templates, Power BI Tableau, data visualization of budget performance, Google Sheets with API integrations, lightweight live monitoring. These tools enable automated alerts, drill-down views, and real-time forecasting, improving decision-making across the board. Ethics and governance in budget execution. Financial discipline goes beyond data. It requires ethical leadership. Common issues in execution, misallocation of funds, spending outside approved categories, collusion with vendors for inflated invoices, ghost expenditures, fake expenses, deliberate non-reporting of surpluses. Ethical best practices: implement clear procurement protocols, ensure independent internal auditing, maintain segregation of duties in financial workflows, conduct regular ethics training for finance officers and approvers. Conclusion: monitoring and adjusting a budget post-approval is the ultimate test of financial leadership. It ensures that funds achieve intended outcomes, financial risks are managed, and the organization adapts to changing realities. This module equips learners with advanced knowledge of how to track and monitor implementation effectively, identify and resolve variances, apply tools and software for real-time control, remain ethical and transparent in execution.